Welcome to Cross-Border Investing, where we look at investment opportunities across the continent. I'm your host, Tshepo Modiba. My guest today is Brian Dlamini from Afriwise Consult. Welcome, Brian. We're going to start off our discussion by talking about, the glamour sector in terms of the African continent, which is mining, and really how it feeds into infrastructure. A quick brief in terms of how you see the two linking together?
Well, the two are interlinked, as it were, but they're completely two different concepts at the same time.
Yeah.
You need infrastructure for mining, and if you've got a package deal, it makes things more exciting, I suppose, from an investor's perspective.
That's a good point. We'll unpack that a little bit more as we go along. Here's a look at the state of infrastructure in the mining sector on the African continent.
Raising enough finance for infrastructure development is one of the key challenges facing Africa's expanding economies. According to the African Development Bank, transport costs alone are 63% higher in Africa than in developed countries, hampering its competitiveness in the international and local markets. Africa and South America will be the next global growth point and will see increased investments, especially from China. Demand for iron ore from China has been steadily rising since 2008. There has also been a similar rise in Chinese resources swaps for infrastructure. Almost 60% of all capex expenditure on commodity projects is infrastructure related.
Just to touch or unpack a little bit on what we've touched on already, used two distinct areas. It'd probably be dangerous to put them together. But in terms of, to tap into the mining resources that the continent, or the vast mining resources that the continent has, infrastructure plays a key role. So you could say that in order to unlock value in the continent, there's other sectors that could potentially benefit?
Yes, I mean, you can imagine, for instance, when you are in the central part of the continent, let's take Zambia, for instance, you need to go in and mine, let's say, copper. Yeah. But then you need to ship it out. Yep. So you need roads. Then you need a port. And if you're in the central part of the continent, you need a port that works. You look towards Durban, you look towards Dar es Salaam, you look towards Kenya, which one makes sense. Then other, efficiencies in the transportation. Rail now also comes into the equation. And then the most important one is you need power for that mine. Yeah. So these are all interlinked, as it were, as I'm saying. But I think where things have been going is where mining concessions have been awarded, along with kind of a power generation idea behind them, just to get things up and running and to get the power story going. But it's been very tough.
What does that mean in terms of, limitations about who can actually get these concessions? Does it have to be a conglomerate where you've got the construction element and the mining element to it?
So now that's the tough part, isn't it? Because on the one hand, you might have a junior miner that doesn't have the balance sheet of a big mining conglomerate, as you say,
sure,
that can, negotiate the power angle into it and say, look, we will put up a power station. And maybe let's then take the conglomerate example. They come in, they want to mine coal somewhere, let's say in the continent. Mozambique is a great example. There's a lot of coal.
Sure.
Then there's a coal power station next door, just to make things easier, the quality of coal is the right one for the power station, etc. But now, to put up the power station, you need to negotiate tariffs,
of course,
with the government. Then you also need to think about, obviously, besides moving the coal out, but how will the power grid react or act when you want to plug this power station on? So you need a power grid study. Can it take? Then you look at the power grid. Can you distribute the electricity to those who need it? And then a most important one is the regulatory framework. So you might find that the mine is delayed by regulatory issues that have to happen on the, say, IPP side of things. So just to highlight, those are the complications of executing a deal like that. And junior miners are at an even more disadvantaged position compared to the bigger ones.
So does that mean that we're not likely to see startup miners in the continent thriving and being able to tap into these vast resources, does that mean that the likes of Anglos and BHP and Rio Tinto are the ones that are really going to continue benefiting from the Africa resource theory?
So I think to just sum it up, all this equates to delays. Delays.
So not necessarily a restriction, but it means delays for whoever's trying to come on board.
Yes, so some of the markets are not ready for these type of grandiose ideas that people come up with. And let's be fair as well and say, look, at the heart of it, you need to look at what's important for the country.
Mm-hmm.
So government needs to sit down with the private sector, the miner, and so do the local communities, and say, this is what's important for us. And government says, this is what's important for us. And the investor also sits down on the table and puts what's important. The negotiation thereof is a process in itself. So, but you'd rather be involved in that negotiation first off, before, proceeding with the grandiose idea and implementing it. You'd rather get things right from the word go, which is what's important. Then after that, you will know how to map out, which part of this deal will you execute first,
sure.
and so on. I mean, just to touch on another one, banks, for instance, want to finance these type of transactions once they've reached a certain level of, at a certain stage and a certain level of comfort. So that also plays into the equation.
Right. So they're not looking for funding right at the get-go. They're looking for some sort of confirmation of deal progress.
Yes.
Now the question is, which markets are, I guess, a little bit more sophisticated, not necessarily from an infrastructure perspective, but from identifying all of these factors and making it easier for potential investors to come through and take advantage of the opportunities?
Yeah. So, I mean, in South Africa, for instance, people have been ranting and raving about the policy framework with the renewable energy deals and
sure.
and how to regulate basically the space in which IPPs operate in.
Mm-hmm.
So that's one, I suppose, good story. There are other markets such as Rwanda who've got a nice power framework who says who's going to do what, when and how and why people are going to do certain things.
Yeah.
So
but unfortunately, Rwanda doesn't have as, I guess, glamorous resources as maybe the DRC or some of those other regions. So unfortunately, whilst the framework there is brilliant, they don't have the same level of opportunities, if you want to call it that. What are the DRC and those countries doing about their opportunities?
So the DRC is currently in, still finalizing their mining code.
Okay.
It's going to come out, one expects, soon enough for people to get comfort. But having said that, what also gives comfort is the fact that you've got multilaterals like the World Bank, like the IMF, who go in and assist some of these countries. I mean, for instance, in Mozambique, in the power sector, they were assisted by the World Bank to come up with a framework that works, that will give investors confidence when they do, the power deals. Now you can then a potential investor is looking at a mine can kind of now look, where's power? Oh no, but it's quite easy to execute on the other side of the equation. And where there's a road, who builds the road? Do I build it? Can we have, how is the public-private partnership framework, for instance, the PPP framework? Are there investors who are going to come into it? So the multilaterals, I would say, have been helping out a lot. I think the other key element to this is you kind of have to get to a point where you get, sorry to be cliche, but African solutions for African problems.
Sure.
It doesn't help to get a framework that's so-called best practice in some European jurisdictions, but when implemented in the DRC, for instance, it doesn't work.
Yeah.
So we need, visionary leadership, as it were, but we also need people who will sit down and look at the peculiarities of that jurisdiction and really apply their minds to come up with something that works.
So which country, if I had to pin you down and say which countries should investors be excited about, should we be actually looking to tap into opportunities relatively quickly in terms of either participating on the infrastructure side or on the mining side eventually? Which markets are fairly ahead there?
Yeah, well, the usual names, the usual suspects come out. You get people mentioning Ghana, although there are other issues at the moment. You get your Mozambique coming into the equation, you get your Zambia coming into the equation. So, I mean, you also get South Africa, which always, attracts the biggest share of, let's say, FDI.
Yep.
You've got Tanzania as well. So, like I say, it's the usual suspects. I think that the thing is which resource and, how do you want to participate? What's the thought behind, the investment? I mean, in Tanzania, you'd be going for gas,
of course,
right? In Zambia, you'd be doing the copper play and whatever other metals, that will come from there. In Mozambique, you've got coal, you've got gas nowadays. So that's the decision mapping process, as it were.
I guess the frustrating thing from an investment opportunities perspective is that the markets with the greatest potential are ones that we're likely to see even further delays on. Outlook, does that mean that those markets, it's going to take 5-10 years for investors to be able to profit, or for all of us to be able to identify companies that are going to be profiting from this?
So luckily the processes of reforms are underway. For instance, I mentioned Mozambique. It's very comforting to see that, quite a lot has been happening there. That also spurs other countries in the region to also start thinking. For instance, if Mozambique gets their story straight with regards, let's say, like we were talking about power, then they sell it to the region. Then there have to be power purchase agreements at a regional scale. Now the other countries next door to Mozambique have to get their acts together before investors kind of start thinking it's taking too long, or thinking twice as such. So I'd say from that perspective, it's very important that one country kind of spurs the ones around it.
Sure. Let's leave it there. So to sum up, great opportunities, work is being done, but still challenges ahead. Thanks to my guest, Brian Dlamini from Afriwise Consult. That's all from Cross-Border Investing this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag CBI. From me and the team, goodbye.